As someone who has been through it all in the world of trading, I've seen firsthand why 99% of new traders fail. And let me tell you, it's not because they're not smart enough or don't work hard enough. It's often because they make the same avoidable mistakes again and again. So here are my top 10 reasons why most traders lose money and how you can avoid becoming part of that statistic. Lack of education. When I first started trading, I made the mistake of thinking I could jump right in without proper education. I've seen this in countless new traders. They think they know enough after watching a few YouTube videos, but they end up burning through their accounts. You need to invest in learning before you invest in the markets. Unrealistic expectations. Many people come into trading thinking they'll get rich quick. I've been there, but trading isn't a lottery. It's about consistency over time. If you're in it for fast money, you're setting yourself up for failure. Overleveraging. This is a big one. Using too much leverage can wipe out your account in seconds. Early in my career, I learned the hard way that just because you can trade with high leverage doesn't mean you should. Protecting your capital is the #1 rule in this game. Lack of risk management. The truth is, trading without a solid risk management plan is like gambling. I've seen traders wipe out months of gains in one bad trade because they didn't set a stop loss or used too much size. Every trade should have a clear plan for when to exit, win, or lose. Emotional trading. One of the hardest lessons I learned was to control my emotions. Fear and greed can destroy even the best strategy. If you're trading emotionally, whether chasing losses or getting overly confident after a win, you're in trouble. Discipline is everything. Not adapting to market conditions. Markets change constantly. What worked last week may not work today. I've seen traders stick to the same strategy, even when the market signals a shift. Flexibility is key to surviving in this business. Following the crowd. Just because everyone is talking about a stock or a currency pair doesn't mean it's a good trade. I've seen traders blindly follow the crowd and lose money when the trend reverses. Trust your own analysis. It's fine to take input, but ultimately, the decision has to be yours. Ignoring the bigger picture. It's easy to get caught up in the excitement of day-to-day trades, but you have to step back and look at the bigger picture. I've learned to never lose sight of the macroeconomic factors that can move markets. Ignoring these is a recipe for disaster. Not keeping a trading journal. This might seem tedious, but I owe a lot of my success to keeping a detailed trading journal. It's not just about recording wins and losses. It's about learning from your mistakes. If you're not tracking your trades, you're missing out on the opportunity to improve. Lack of patience. Finally, patience. I've seen traders get frustrated after a few losses and quit too soon. The truth is, consistent profits take time. You have to be in it for the long haul. Those who aren't patient enough to wait for good setups are usually the ones who end up losing it all. I've made many of these mistakes myself in the past, and I've seen many others do the same. But with the right mindset, education, and discipline, you can avoid these pitfalls. Trading is a journey, not a sprint.